Dustin, it's
Hello,
episode 25.
lucky 25. We have so
Lucky
much to
25.
talk about today.
Do we? I'm like frantic and I just barely sat down. I came from the Open locally. I know you're in New York, but the Open is the world's largest party. It's a golf tournament, but it's literally the world's largest party with 1 million people. So for those who don't
Oh,
know what the Open is, it's like Epstein Island, but legal.
Jesus.
But everyone volunteers to be there. No one's getting dragged into there. Yeah, in fact, they fight to be in there, and they pay hundreds or in some cases thousands of dollars to be in this ridiculously crowded. Actually, it's a good thing I got out of there in time because for this podcast because by 3 o'clock in the afternoon, everyone's wasted. In fact, the sponsor of the Open is Waste Management, which I thought initially I was like, that's a terrible name for a golf tournament, but it turns out it's like the perfect name
It's
for
irony.
it's
Um, I
irony.
I just can't believe you got us canceled less than a minute into the podcast. So,
Oh, believe me, I'm shocked we haven't been canceled yet. So
uh,
we'll get there soon enough. Trust me.
okay.
If you let me talk too
Oh,
long,
I
we'll get
know.
canceled for sure. So that's why you're on the podcast, Dustin, is you got to keep me in control.
I'm waste management.
Yeah. You know what's funny is that I didn't drink, but I had a couple of Red Bulls, so I'm like extra energized
Oh,
today.
geez. Okay, we should get into it because we have a packed docket. Obviously, we're
Yes.
going to talk about the market sell-off. SpaceX is
What?
acquiring XAI. Um, Tesla is discontinuing the Model S and X. We both of us made a lot of updates in our portfolios, and of course, we have to talk about earnings. So let's just jump into the market sell-off. As you can see, I am wearing red to celebrate. Uh, what are your thoughts?
What
What's
does my
going on?
brown mean? It's like let's not get
Yeah.
there.
Speaking of being canceled,
Yeah.
uh, what are your thoughts? What's going on?
I mean, at a macro level, I have no idea. There might be concerns about war with Iran. Who knows what the market sort of like latches onto at any given moment or on any given day. But it's definitely not fun to watch your portfolio go down 5, 10% in a day or a week or whatever. Because regardless of the size of your portfolio, whether you have $1,000, $1 million, or $1 billion, when it goes down 10%, the psychological effect of that are so freaking real because you're like, if my portfolio goes down 10% in 1 week, it's easy to extrapolate that, oh my God, if I had, let's say you had $1,000 and it goes down by $100. Well, if it goes down that much, 10 times, you're down to zero. So it's easy for us, to look at the negative and extrapolate and be super concerned. And of course, who isn't concerned when things go down, 5, 10%? It's natural human behavior, and we always seek for an explanation. But what I
Yes.
find super interesting is that when it goes up 5 or 10%, we're never like, why did it go up 5 or ten
Yeah.
percent? It's just that never happens in reverse. So um, it's it's difficult to be consistent. It's difficult to sort of like have a tempered attitude towards the ups and downs. Um, Much easier to have a tempered attitude towards the ups than the downs. But yeah, here we are though. It's an interesting day for sure. What are your
Yeah.
thoughts?
I agree. We always try to figure out why the market's moving the way it does or is, especially when it's going down. And normally I try my best to disregard that because it normally like we try to find the reason. It doesn't mean it is the reason. There
Right,
are certain examples where there is a very specific reason, like COVID's a great example.
right.
Um, but like today, it seems like the thought is maybe AMD's earnings caused some panic selling, and they beat on earnings, but I think there was, like, a one-time, China, windfall where it kinda pumped up the earnings more than
Mm,
what the expectations were. So, like, Is that really the reason? I don't know. Is this the beginning of a bubble starting to pop? Probably not. Uh, but, as you know, I started my investing journey with crypto, which is extremely volatile, so this feels like home to me. I'm very it's not fun,
The
I'm
volatility is you're
yes,
normalized to it, so it's
correct,
not bothering you.
correct. So, like, I'm not bothered by it. I rather see my portfolio go up than down, but I try to view this as more of a buying opportunity and a flash sale. And it doesn't mean I'm buying things at the best prices. Like I bought iron today at around $47. I think right now it's $44. So like, things are continuing to drop, but I'm happy to, have opportunities to get in here. So that's kind of my overall view.
Well, we have a lot of stuff to talk about. We've made a bunch of modifications to our portfolios. Where should we start?
Let's do I think we should talk about the news first, actually. I think
Okay.
we should talk about SpaceX acquiring XAI.
Yeah.
What are your thoughts on this?
Well, it's a little bit of a surprise to me because I thought that the way in which Elon would try to get control of Tesla was by having Tesla do a reverse merger into
Yes.
XAI, where he has controlling shares, meaning controlling shares. You could easily, on a private company, have 10x voting rights, and if XAI were to become public very briefly, then do a reverse acquisition of Tesla, he could sort of get that control that he's
Yeah, I
always
thought that was a
wanted.
great idea, by the way.
Yeah. So it's surprising to me that that never happened. But of course, he got his $1 trillion pay package, so he got his concerns were somewhat addressed there. Um, but there's only one reason for XAI and SpaceX to merge, and that is to build AI data centers in space. And this is a very bold and ambitious goal of Elon's. And if anybody can do it, it's Elon. Um,
And if any
there's a
company can do it, it's SpaceX.
and if anybody, and that's right, because if Starship is a success, it could take 100 tons to orbit at a time. So you could potentially think of it as like taking up a small data center to orbit, one a new data center to orbit every time that it launches. And if they can do these launches, very quickly with very quick turnarounds, I mean, this could be a pretty incredible opportunity for SpaceX and XAI. Um, so that is on the positive side of like why these two companies might be merging, is to build these huge data centers in space without having to be concerned about regulatory. They don't have to have like public meetings, hearings, whether or not they can build a data center. They don't have to worry about the power needs, because they can just use solar. And SpaceX is sort of building all of it end to end. So from all those standpoints, it could work. It is something that could work, right? It hasn't been proven, but if
Right.
again, like if anybody can do it, it's SpaceX and it's Elon. Now, the naysayers, and it's kind of hard to completely discount them, are of the opinion that okay, Elon acquired Twitter, renamed it X, and then built a side business, a new business called XAI, which had nothing to do with X, the Twitter business. But they were burning through an enormous amount of money with no revenues. So he sort of like merged these two companies and started building and raising capital as a combined company, which had Twitter's revenue, right? And then using Twitter to sell Grok subscriptions. So he did that merger perhaps to save XAI, because XAI on its own wasn't sort of like making headway. And then it's still burning through a ton of money. And now it's merging with SpaceX, which has an easier time raising money. So is this like Elon using one of his companies to save another one of his companies? It's hard to completely discount that sort of like negative sentiment around his companies. But this is part of the reason why so many people get annoyed with Elon, is because he doesn't keep everything separated and isolated in the way that traditionally public companies have, or companies in general have. Everything with him is intertwined very, very deeply. So if you're a Tesla shareholder, should you be happy about this? Should you be upset? Like if you're a X shareholder, should you be happy about it? SpaceX shareholder, like it's all sort of a mixed bag of things, right? You don't know whether or not you should be happy, or if some of the negative sayings are perhaps correct. This is a company that's burning through an enormous amount of money. XAI combined with X is burning through an enormous amount of money in these data centers and AI investments that they're making. And SpaceX is on the verge of profitability. So, merging the two is going to make them not profitable again, right?
Right.
Yeah. So there's definitely something to not be happy about here as well. On the other hand, if the SpaceX data centers in space with AI training end up being a huge success, I could see a world in which 5 years from now or 10 years from now, we look back and we're like, wow, that was brilliant of him to do that.
Yeah, there's also an argument where SpaceX didn't need to acquire xAI to put data centers in space, similar to how SpaceX put satellites in space for Starlink. Like I don't think they acquired anyone to do that. I could be wrong. Um, but
Yeah,
also,
they built their own satellites for the communication satellites because it didn't exist. But in this case, one of Elon's companies has a component that you need, which is um, the software, the brains, essentially, the large models, the AI models.
right.
XAI
Well,
has that.
right. It depends on, I guess, the business model. Because if you're putting data centers in space and you're renting that out, similar to like an iron, which is obviously on Earth, uh,
Right.
then xAI could be a customer of SpaceX along
Yeah,
with
absolutely. And
others.
in fact, another one of his companies, Tesla, is building the chips that all of these companies need in order to put into space. So technically speaking, he is talking about the AI chips that they're making for their vehicles. Version 5 is coming next year, potentially, or maybe this year, late this year. Version 6 of these chips, he's saying, is going to be even stronger than NVIDIA chips. So he's going to be using those as the training chips for the data center. So technically speaking, Tesla is making the chips that need to go into these data centers that would be ideal for space data centers. So at some point, you might have all three of these companies merging, or the new
Right.
SpaceX that contains xAI also merging with Tesla. I could see that happening as well. And in fact, that might be the way in which SpaceX goes public. So it hasn't gone public yet. It's just merging with xAI. And down the road, it might just go merge with Tesla to become a public entity. And then you wipe out all of the profitability of the three companies combined, because the only one profitable right now is Tesla, and its profitability is on a decline, but at least it has enough cash to be able to hold it over for some period of time anyway.
Right. I do feel like it's early for SpaceX to acquire xAI. Going back to your point of like this is a untested hypothesis, like
Yeah,
you would think they would need to know for certain this is going to work and the benefits are real,
right.
and the finances make sense before they do a move like this. The other concern I have, which might be silly, I don't know, is it seems like the security of having a data center in space is difficult, meaning like if someone were to attack a data center in space, like it seems like it's very doable. Or I don't know, a satellite attaching to it. Like I don't really know what's
Well,
possible, but it's not like it's protected by being in
land.
America, right?
Well, I feel like data centers are much more susceptible to attack, or just on land, because anybody can just walk up to a data center and potentially I mean, we're going
Yeah,
totally
that's true.
off off the
Yeah,
rails here, but put explosives around data centers and blow them up. It's a much more difficult challenge to get something into orbit and to have it navigate to the exact location of the data center. So there's probably what, 5 countries that might be, or 4 countries that might be able to do something that detailed. Maybe 5 countries: India, China,
that we know of.
uh, yeah, that we know of. Maybe, but
Yeah.
like it's at the country level. It's not at the
Right, yeah.
individual level,
Yeah,
right?
that's fair.
So, um, Yeah.
And then last question on this, and we'll move on. What do you think this means, if anything, for Rocket Lab?
Well, I mean, I think that anybody who's doing anything in space is should benefit from, like, if this turns out to be something that is doable and turns out to be fantastic and like, wow, look at SpaceX and Elon having this massive advantage. We won't know that for sure for at least, I would say, 3 to 5 years, maybe even longer. Um, but assuming that was the case, uh, then who's number two? There is no number two, right? Right. So Rocket Lab is in a fantastic position to be building all of the technologies that they could be the number two. Blue Origin would be the other one, but really, there's only Blue Origin, SpaceX, and Rocket Lab. So I see this as a very good thing for Rocket Lab long term. I see space in general being a very good thing, despite data centers in space. Even if that wasn't going to be a thing, Rocket Lab is in a fantastic position. But
Do you
but
do
this
you
could
think Rock
accelerate it even more.
do you think Rocket Lab would be the ones to build data centers in space, or do you think they would just be transporting and it would be a third party building that, or both?
At least initially, it would be the third party scenario because they simply don't have enough resources and they haven't been building the technologies for data centers or AI. So they're not at the same level of Elon's companies, right? But yeah, if you were Google and wanted access and you didn't want to use SpaceX because they're a competitor, or if you were anybody else basically and wanted access to space, um, Rocket Lab would be potentially your sort of like next best bet. Currently, Blue Origin would be another one.
Right. So I want to talk about staying on the Elon train. I want to talk about Tesla uh, canceling or discontinuing the Model S and X, and I have some thoughts on this. So
Yeah,
my initial reaction was like, this doesn't seem great, especially from a consumer perspective. Like, who is interested in specifically a Model S? Not that I was
right,
ever necessarily going to get one, but now that that option is off the table completely. But then I was thinking about it a bit more, and I did a bit of a 180 where I felt like this is the right decision. Um, a lot of people on X were posting about how the S and X models make up like 3% of units sold,
right,
which isn't that relevant of a number because these are luxury vehicles. So of course they're going to have less units sold than their
right,
more popular vehicles. But if you look at the revenue, it really only doubles that number where they make up roughly a little over 6% of Tesla's revenue.
right.
So then the question is, if you believe in autonomy, and more importantly, if you believe autonomy is going to generate more revenue than these luxury vehicles, is it worth uh, discontinuing these products to make way for the autonomous products, assuming you don't want to build additional factory space?
Yeah.
And I think they made the right call here. I think it was a difficult call, um, but I believe in the Optimus product and the autonomy vision, and looking at the numbers, it seemed like it was right to me. But what do you think?
So obviously, Elon has a much better visibility into these type of decisions than anyone on the outside
Yes.
does. So like my comments should be taken with a grain of salt. But Elon, the Tesla community has been begging Elon for updates, for real updates to the S and X. Neither one of which have really been updated in any significant way.
Right.
Surprisingly, the Model 3 and Model Y have both been updated in a very significant way in a much shorter period of time. And the way I see it is that if Tesla had taken the time to update those vehicles in the same way that it updated 3 and X, they would also continue to be best-selling vehicles of their kind in the luxury class. There's no reason why Rivian R1S should be outselling the Model X. The Model X should be on its third refresh right now, but it's not. It's just like basically had some internal component improvements and hardware 4 put in and things of that nature, but no exterior looks improvements, not much on the interior. So what is kind of disappointing for a lot of Tesla vehicle fans is that no matter how successful robotaxis become, I want to own my own car. I want to own my own car that can drive everywhere, and I want to, potentially share like my vehicle with my family members, but I don't want to like share it with just random people, right?
Sure.
So I don't want to be renting some car on a as needed basis. So yes, the future might a significant portion of the future might start going in that direction, but it's going to start out with single digit numbers before it becomes double digit numbers and before it becomes 90% of the market. That we're decades away from that. In the meantime, build more vehicles for God's sake is a lot of people's view on Tesla. I'm one of those people. Is like, why are you giving up the car industry essentially with no new models? You had plans to have a lower cost model. You had plans to have a Roadster 2. You had plans on creating the Semi. Like all of these plans appear to be given up. Even, they've kind of given up on the Cybertruck. They've obviously given up on the S and the X. So now they're down to two vehicles, literally just the Model 3 and the Model Y. And even they seem to be sort of less of a priority than robotaxis um, and Optimus. And this is before robotaxis or Optimus have any revenue for them. So it just feels like jumping the gun. But this kind of goes back to another thing that in Elon's mind, once he realizes something is going in a particular path, right? Like where he thinks that the puck is going, he already believes that the puck is there, and that like he needs to prepare for like that scenario. Whereas it might take many years for the puck to get there, and in the meantime, I feel like Tesla could do a lot better if it was just sort of like catering to what the demand is today, but also understanding where it's going. And I feel like Elon doesn't do a great job of doing both. He does a great job of sort of like understanding where the puck is going, but sometimes he's predicting that tens of years in advance. Right now, he's talking about achieving what is it, Kardashev level 2 for human society. That's like harnessing the more than the solar and the entirety of a solar system's energy. So we're what, like less than 1 millionth away from from that humanity. I mean, like he's like literally thinking many, potentially hundreds of years out, and that's what he's trying to accomplish. But it's like, dude, we can sell cars in the meantime for the next 10 years before we get there. And uh, yeah, it's a little bit too far in advance for me.
Where do you think the customers that would have bought the S and X are going to go? Do you think they're going to buy a different model of Tesla, or do you think they're going to go to Rivian or elsewhere?
Well, on the luxury side, if you wanted something comparable to the Model X, the R1S is already beating it, and like the Rivian has shown that the Rivian R1S has become the best-selling luxury SUV, right? That's EV, and in some cases, in some states, it's just the best-selling luxury SUV. Period. Like in California and a few other states as well. So. Rivian is a potentially great choice. Unfortunately, Rivian also doesn't have enough models to sort of address the needs, in my opinion. You could go to BMW and Mercedes. They have some interesting options. The problem with those vehicles is that the software integration is not nearly as good. The routing systems for like when you put in a destination, if I want to go on a long trip to like route you through all of the charging stations and tell you how long to wait, charge at each station, those are not as good. So those guys could potentially step up their game and capture a portion of the market. But a pure EV company, besides Tesla and Rivian, doesn't exist that could like really capture that market. So Rivian is in a pretty good shape right now, I would say.
Okay, let's talk about your portfolio. You've been making several purchases, not just today as the market's sold off, but the market's kind of been selling off since our last episode.
Yeah.
So what have you been buying?
Oh boy, I don't even remember. Why don't you remind me what I've been
Okay,
what I've been
what
buying?
you have been
Oh,
buying is Meta, Micron,
yes,
and Robinhood.
yes, and all of them were terrible buys. I shouldn't have done that until today. Um,
Right.
no, but okay. So let's start with Meta. Meta had a stellar quarterly report, they continue to just kick butt. They're making all the right investments. We've talked about this quite a bit. And now, despite having a string of quarterly report after quarterly report showing that they are a solid, profitable, cash generating machine who happens to be investing in all these AI technologies that they will likely benefit from in the future. They don't have any AI products making revenues that they're making revenues from today. So, and you can buy them like cheaper today than 6 months ago. It just doesn't make a lot of sense to me. And their price earnings multiple is fantastic. At some point, if it gets a little bit cheaper, it just seems like a no-brainer that they would start doing a share buyback because they have the cash to be able to do it. They were asked about a share buyback on the earnings call, and their CFO answered that right now our focus is on the AI investments and things that we feel like have potential better return. But that changes if the stock price changes significantly. I
Absolutely.
think I think that Meta is probably, if I had to speculate, is probably within 5 to 10% of the lows that it's going to have potentially for the foreseeable future without like some kind of market meltdown. Um, I just don't see them going, significantly lower than they are. Let's say 10% lower than they are, without some kind of share buyback kicking in, or them sort of having a board meeting and deciding, like, look, our price per share is now so cheap that it doesn't make sense for us to just sit on the sidelines and not do anything about it. On the other hand, you take a company like Micron. Micron doesn't have the luxury to be able to do share buybacks. They're not yet generating as much cash like the way Meta is. So they're like a little bit higher risk. The speculation on Micron is that because of the memory shortage, uh, it's just going to have this enormous amount of cash generation over the next couple of years, maybe 3 years, and possibly beyond if this AI craze continues. But in the short term, you constantly hear these narratives that, wait, maybe the whole AI thing is a bubble and it's about to burst. And if that were to happen, maybe, like Micron sort of collapses again. I don't subscribe to any of those sort of bubble bursting in the AI world theories. And therefore, Micron seems just like a great buy, especially if they can meet the expectations that they have for this quarter, which is really, really lofty expectations. Now, I did buy some, I think it was late last week, right? But I haven't bought any
Yeah,
this
something like that.
week yet. I
Surprisingly,
would have
didn't buy
loved
today.
I would have loved to buy some today. I probably would have if I wasn't at the open, but uh, I'm also running lower on cash than I like. I think I'm down to like 15% cash. So,
Well, if the
I'm
market continues to sell off, that's gonna change very soon.
yeah. So I might if they continue to sell off Micron, I might buy some more. We'll see.
And what
And
about
then of
Robinhood?
course Robinhood. So this is a company that obviously we have talked about quite a bit. And you are absolutely right that in the short term, the market has decided is completely attached to Bitcoin or
Wait, I think my
whatever
headphones
crypto.
disconnected. Did you just say I'm right?
No, I never said that. But 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 I think you and the market are wrong in that there shouldn't be any association
I
to
don't
it.
think there should be. I never said
Yeah.
there should be. I don't think
Okay.
there should be. I'm just saying this is how the market has worked. I'm
Yes.
pointing out this is how the market has worked, and
Yeah.
I don't know when that's going to change. And that could
Well,
change as early as next week with earnings, by the
okay,
way.
let
I
me
don't I
let me
don't
show you let me show you one thing that is kind of interesting. So here, actually, let me do it on um, Earnings Hub. So where is Hood? So let me pull this up real quick and compare Robinhood to Bitcoin. And when we do short term, let's say like the past week, or let's say the past month, you can kind of see this very like direct correlation. But if we do the past year, look, there's Robinhood in green and there's Bitcoin in blue. So the correlation is much much more disconnected on a longer term basis. And what happens in the longer term? Well, it's these earnings that happen, right? It's this, and these earnings are what sets it apart. Bitcoin doesn't have earnings reports; it doesn't produce anything. Robinhood is going to have their earnings next Wednesday, and I all indications are that it is probably going to have a fantastic earnings. And my view is that Robinhood's revenue from crypto is only roughly 20% today. Even if they were to lose 40% of their crypto revenue, uh, which is roughly about $100 million on a quarterly basis, $100 million off of $1.3 billion of revenue is not that much. It's, granted, it's like 7-8%, but 8% for a company that is growing so rapidly is not that much to make up for. So that $100 million could easily be made up for by one of their 10 other revenue streams, one of which is growing ridiculously fast, is this prediction markets, where their Q3 revenue was around 25, maybe to 30 million. I don't remember the exact number. But in October, just 1 month, they had already beat all of Q3's uh, the number of the dollar amount of contracts that had traded in the prediction markets in October, and then they beat that again in November. So they haven't said what their December numbers are. So there's a good chance just Q4's uh, revenue from the prediction markets might exceed $100 million, and that would completely make up for the crypto downfall, right? And that's assuming that crypto revenue goes down significantly. Just because crypto price goes down doesn't mean the revenues goes down. It is correlated between from transactions. So there's a chance that they still, the crypto revenue doesn't even go down that much. Maybe it goes down 10 or 20% because of the lower prices, but um, who knows? All remain to be seen. Here's how I look at Robinhood, though. I look at it as it's a great company. It's executing fantastically. And at $150, I was shaving and trimming, and I thought it had gotten a little bit ahead of its skis. But at $80 a share, almost half off, it now has a PE of around 40. When you extrapolate its growth rate, next year it's going to have a PE in the low or high 20s, maybe. 2 years out, it could have a PE in the teens if it grows at these rates. So um, I think it's a great company at a good price. It's not a great price, but it's a great company, and that's the sort of like the Warren Buffett style of investing, is to buy great companies at a good price and just wait it out, right? So if it goes down to $40, what was your prediction? 40 or $50?
54, which I'm about to
$54.
break down. Yeah.
54. I'll just buy some more,
Right.
which is why part of the reason I need to reserve some cash. But I think you'll be wrong, and it won't hit that low. But we'll see.
I
All right,
think I'm
break it
gonna be
down for
right,
us.
and I think it's gonna easily get to 50. So $54
Easily, okay,
easily, yeah. $54 is not a price target by any means. This is
okay.
just where I think it's going to easily get to, and it can go lower. Who knows? Maybe it won't.
Not investment
Just
advice.
not investment advice, no. This is just like for fun,
No,
like thought
just doing that
experiment. Uh,
to mess with you.
no, it's not
Yeah,
investment advice. Thank you for reminding me.
no
Uh,
worries.
and yeah, so
Break
let
it,
me
break
break
it
it
down.
down.
Break it down. Okay.
So basically, I'm looking at the historical price history to kind of figure out where Robinhood should be, assuming it remains correlated to Bitcoin and assuming crypto continues to be in this bear market, which are my two like base case assumptions. Either
Right.
of those can break, like we just mentioned, like this could decouple from earnings next week. We'll see. So I've been watching you buy Robinhood. I think you made maybe like 2 or 3 purchases over the
3,
last
yeah.
week, and every time I'm like, "Ah."
It's going
it's
down
gonna continue to
further.
go down. And I
Lots of
don't
people have
blame
been
you.
telling me that on X, by the
Yeah,
way.
and I don't blame
Yeah.
you for buying. I think your strategy is actually great, like, in general. And typically, I think that a big difference between our strategies is you'll buy at worse prices, but you'll buy more of the stock, and I'll buy at cheaper prices, but I'll buy less of the stock. And honestly,
Mm.
if I had to choose between either of those strategies, I would go with yours, even though I do mine. Um, but whatever. That's besides the point. So I'm watching you buy Robinhood. I'm like, it feels too early, but I don't actually know what would be like even a reasonable price. And again, this isn't a price target, but would like just like where should Robinhood be going if it follows what it's done historically? So the first thing I did was I again because I think it's correlated with Bitcoin, I looked at where is uh what is the average price of Bitcoin over the last 200 weeks, which is historically a place where Bitcoin tends to go during these bear markets. Right now, that price is $58,000. Bitcoin is currently at like $73,000. So I'm just going to round up a little bit and say, let's say Bitcoin's going to 60,000. So then the question is, well, uh, what is one share of Robinhood worth in terms of
In Bitcoin.
Bitcoin? Right? So, like, instead of a dollar denominated value, it's a Bitcoin denominated value, which really only
Right.
makes sense to do when something is connected to Bitcoin. It doesn't make sense to like compare the price of Chevron stock to Bitcoin.
Right, right.
So the answer to that is uh, so typically, or most of its history,
Historically.
yeah, one Robinhood share was worth point zero 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 two to point zero 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 six Bitcoin. At the high, because you just showed Robinhood outpaced Bitcoin fairly dramatically. So at the high, it was point zero zero one five. If we look at the 50-week average price, in Bitcoin, it's 0.0009. So somewhere in the middle of like where it
Okay.
was and where it has been. So then if you multiply where Bitcoin is, where I believe Bitcoin is going, the 60,000 by the average price of Robinhood in terms of
To
Bitcoin,
Bitcoin.
you get this $54 number. So
But
all of
shouldn't you
that
get a
being,
range? Like
uh, what
because
do you
that
mean?
range is pretty big.
Oh,
Point zero
like, oh,
zero
yeah, yeah, yeah,
two to
there's technically a range, but I'm simplifying. So
okay.
just $54 is
But
fine.
that's a pretty big range because like the bottom of the range to the top of the range is what, like 4 times as much? Point zero
Uh,
zero two, or was it zero zero
well,
zero two?
you're
Point zero
so
zero zero
that I don't think
eight?
it's going down there. So that's just like the range of it's
It has
where
traded.
most of the price action is, but the actual average 50-week price is 0.09. But the
Okay.
range of like point zero 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 nine nine versus point zero 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 nine is actually a very big range because the price of Bitcoin is large.
Right.
So that's what I thought you were
Gotcha.
talking about. But yeah, I'm not necessarily saying it's going back down to like those lows. It's just to add context of like, I don't think it's crazy to say one share of
It might
Robinhood's going to
hit
be worth.
54. Okay.
Yeah.
So, okay,
Yeah.
do you believe that it's gonna hit 54 or like
Yeah.
it's very likely? You do?
Yes.
Okay.
I do.
Should we put a friendly wager on this?
Yes. Yes, you
All
should.
right. All right. What should the wager be?
I don't know. We might need to figure that out offline.
I want your Rivian model car.
Yeah, you get me a Rivian car, and I'll give you my Rivian model car. That sounds fair.
That's funny. Um,
Um, but yeah, I think it's very realistic. Again, I don't think this should happen. It's just if Robinhood continues on this path, this is where it's
uh,
going. And by the way, one
how,
last point.
yeah,
Uh, I all of this is I'm looking at all this, not even considering the actual Robinhood price chart. I'm looking at the Bitcoin price chart and then
gotcha,
Robinhood
gotcha.
relative to Bitcoin. So it's not looking
Okay,
at Robinhood's price.
when would the wager be for? Like 10 days from now, a month from now?
So I mean, I, technically, because I'm thinking about this in terms of a Bitcoin bear market, I think, and you might say this is too long of a time frame, really, like, till the end of the year,
Oh my
early
god.
early
Anything could
early
happen between now and then.
yeah,
Okay.
earliest
So we're not talking about
October.
over the next month or something
No,
like that.
I'm not saying it's an immediate drawdown. If
Okay.
anything, I think there's a realistic chance that, there's a counter trend rally, um,
Okay.
in crypto and for everything else. Um,
Okay.
so
I'll tell you what. I'll give you until the end of the year. If at any point Robinhood goes to 54 or lower,
or
you
lower, yeah.
win in the remainder of the year. And if it doesn't, if it remains above 54, I win. Is
Great.
54 the right number, or do you feel comfortable with that, or do you want me to?
Yeah.
I'm willing to raise it to like even 58.
No, I mean, the highest I would go is 54.99, but that's the
Well,
absolute
you know
that's
what?
the
I'll give you 60. I'll tell you what, because
oh, that's
I
way
feel
too
extra
generous.
confident.
That's way too generous, but
But here's what we do. We'll make the wager one share of Robinhood.
great.
So, are you sure? Because if I win and the shares, could be $150, you would owe me whatever.
That's I understand the risks.
Okay, but I'll give you all the way to the end of the year.
Great.
If it at any point goes below 60, I owe you a share, and
And if
so
it doesn't
win
hit that by the end of the
immediately.
year, then I owe you a share.
Yeah, is
Great.
that fair? All right,
Yeah,
let's do it. You're on.
deal.
Okay. All right. What else do we have to talk about?
Uh, we should talk about my portfolio.
Let's do it.
So, uh, let's stick with crypto.
Uh,
So I
Iron.
oh, we could okay.
Oh,
We'll start with stocks and then we'll go to crypto because the stocks will be quick. So while the market's been selling off, I bought Rivian, EOS, and Iron. There's no real updates on any of these companies. It's just they're down a decent amount, so I've just continued to buy. Iron is reporting their earnings tomorrow, so we'll see if that has any positive or negative impact. I know during their last earnings, their stock really tanked, so that could certainly happen again, but we'll see. The more interesting update with my portfolio is I swapped Ethereum for Bitcoin. Earlier in the bull market, I was swapping Bitcoin for Ethereum. Ethereum
mhm,
being a smaller market cap compared to Bitcoin, it's typically even more volatile and typically runs up more than Bitcoin does in a bull market, which was not really the case this bull market, by the way. Uh, During a bear market, it's the other way around where like Ethereum will drop more, Bitcoin will still drop, but drop less. So
right.
I'm kind of just hedging my bets here,
Nice.
knowing that or expecting that Bitcoin's going to continue to drop. Why? Why are you laughing?
No, no, I'm not laughing. Keep going.
You're like this idiot. Uh,
No, I love it. It's good. It's a good contrast to my way of thinking about
yes,
stuff.
yin and
So
yang.
keep going.
So the last time I swapped Bitcoin for Ethereum, um, even with prices going down, I'm still up like 60% in terms of Bitcoin. So that was a good move. I wish I swapped Ethereum back to Bitcoin a week earlier to wait for that point to come again. That would, at least when I was doing the swap initially, I don't know what the math is today. I'd have to wait for the price to go back up to like by 10-15%.
Okay.
If the price drops back down to where I initially did my Bitcoin to Ethereum swap, the price would go down like 40%. And I really want to just wait for the price to go back up because that's just human nature, right? Like it's like, oh, I missed this opportunity. I'm going to wait for it to happen. But then there's this risk reward ratio of like 10 to 15% upside versus 40% downside. Why am I sitting in this?
Right,
So
right.
that's the reason why I pulled the trigger. To pivot more into Bitcoin during this bear market. Because again, I see this bear market happening for until the end of the year, not necessarily until December, but for a
But
majority of
for
the year.
some time, for a
Yeah,
decent portion of 2026. Makes
yeah.
sense.
So just kind of putting my portfolio in defense mode, even though it's gonna take a big hit by being in so much Bitcoin. Now Bitcoin's like 39% of my portfolio. But I'm okay riding the roller coaster. I'm less comfortable riding the Ethereum roller coaster,
Right, right.
especially with how it performed this past bull market. So,
That's
tho
awesome.
those are the updates for my portfolio. Should we get
Very
into
cool.
earnings?
Let's do it.
Okay.
Which company?
Let's start with the earnings that happened this afternoon because that's fresh. So
Okay.
Google just reported they beat revenue by almost 9%, and EPS
Holy
by 8%.
macro. That
Yeah, so
those are
two big
huge beats.
yeah,
Wow.
and the stock, I mean, it's a very red day, but the stock is only up 1 basically a little over 1% today.
Wow. The revenue beat in particular is shocking. They were expected to have 104 billion in revenue, and they had 100 and almost 114, almost 10 billion more. That is like
Yeah.
an entire like OpenAI more in revenue. It's it's incredible. An extra 10 billion uh than expected. That is like a monster beat. And of course, their EPS was also a substantial beat as well. That is super impressive. I'm shocked that the stock is not up more after hours. It might just be because
I
of like what a bloody day it's
yeah, I
been.
think it's just the market.
Yeah.
Um, okay. Qualcomm revenue basically matched expectations. It's up 0.26%.
Okay.
And EPS, that was a big beat of 11%.
Okay.
And the
Interesting.
stock
Stock is
is
down
down
9% after
9%.
hours.
Yeah.
I wonder if that's affecting Nvidia. Um, oh no, Nvidia after hours is up 1%. Maybe because of Google.
I don't know. And ARM is also had a even bigger beat. Revenue beat by 0.8% and EPS beat by 30%, but it's also down a little over 4% after hours.
Interesting. Okay.
Yeah. Uh, and then
What about
let's
Snap? You have Snap on there
yeah,
too.
yeah. Snap wow. EPS beat by 200%. Uh,
Oh
they were
wow.
expecting negative 3 cents EPS, and it's actually reporting 3 cents,
Positive.
positive 3 cents. Uh, and revenue
What did the
beat
stock
by
do?
basically 1%. And the stock is up almost 6%.
Oh, nice.
Yeah.
It's funny because my daughter is like uses Snap nonstop every day. You know, like all her friends use it, everything. And then I opened an account with her, for her, an investment account, and I told her to invest only in things that you use or whatever. So
Mhm.
Snap was one of the companies I introduced to her that is public company, and I had her put some of her money into Snap. So she's a shareholder in Snap. It's been down
Right.
since she invested, but today's report is positive. So it'll be interesting to see what happens tomorrow
Is she
in
gonna
that
be
stock.
listening to the earnings call on Earnings Hub?
She is not as into it. Let's put it that way. Not yet, anyway. We'll see. I'm trying to, like get her interested a little bit
Yeah.
in investing. If it
That's
starts
awesome, though.
making her money, I think it'll be like, oh, this is possible, and then she might get interested. We'll see. So far, it's been negative.
Yeah. Uh,
Which might be good too. Really, I like it's in. I think it would be best for people to be focused on building things as opposed to investing. The younger
yeah.
generation, but investing should be something that they are aware of and know is happening, and like what to do with their sort of still capital, like money that's just sitting around not doing anything for them.
Yeah. I also think it's better, from like a first introduction into investing, it's better to experience red than green.
Yes. Yeah.
Right, like, meaning, like, you kind of think like, oh, this is easy, and you
Right.
get like you don't understand the risk of the market. Like it's super important to understand days like today,
Right.
and not panicking.
It's kinda like gambling, you wanna lose the first few times.
Yes. That
'Cause
did I ever
you
tell
would
you? So when I introduced my wife to gambling, we were on a cruise, and I had her put, like, $5 on the roulette table. She lost
yeah,
it immediately and then
okay.
never gambled again,
Well, that was a very inexpensive lesson.
right?
That's
Genius.
awesome.
Okay, let's get back to earnings. Let's talk about, yesterday, AMD. Beat revenue by over 6%, beat EPS by over 23%. But again, there was this like one time like Chinese purchase. So that
Okay,
inflated the numbers.
okay.
And I don't know, let me go to the price chart.
Ooh, down big.
Yeah, so you could see like
Yeah,
it tanked here. And again, there's a
yeah,
chance this is what kind of spooked the market. I don't really know.
right.
And by tanked, I mean it went from like 240 to 200.
U Uber also reported yesterday, right? Or was it
This
oh, no,
morning.
no, today, this morning.
Yeah.
They
So
also went down.
yeah,
Yeah.
they were down today. Hard to know. I mean, their EPS they did miss by 9%. Revenue they were up
Mm.
a half of a percent.
Yeah,
Um,
I got out of my last share of Ubers I sold in the low 90s. No regrets. Obviously, the stock price is in the 70s, but in my opinion, their robotaxi response strategy is not the greatest. They need to own
mhm.
the full stack. They need to own the hardware, the software, the AI, everything, and they're not doing the right things for that future. So they're handing it over, in my opinion, to Waymo and Tesla's robotaxi network, whereas they should have just bought Rivian and built the entire thing themselves. So that's the reason that I'm not bullish on Uber, but it's a cash generating machine. I just don't understand why they're sitting on all that cash and not doing the right making the right investments to get there.
I agree. I also think they have a very weak moat. Like you could
Right.
totally you have to go city by city, but they're very easy
Right.
to disrupt. Um,
Their
like
moat can be disrupted by price. That's it. Because
right.
people are motivated by saving money and before when you had to also get the drivers, your moat is uh, protected by the fact that you need both sides of the equation. You need the drivers and the customers. And you can't get the drivers if the customers are not there. But if you have robotaxis, the drivers are part of your robotaxi, right? Like it's
Yeah.
Tesla's robotaxis are the drivers, and therefore they have plenty of drivers. So they only have one side of the network that they need to work on, and that can be addressed with price, safety, and just other promotions or whatever necessary to get there. And it's not as expensive as a two-sided network, which
Yeah.
that was what was protecting them before, and that protection is about to be gone. So
The other stock I wanted to just hit on is PayPal. Their earnings was not as strong. Revenue missed by over 1%. EPS missed by basically 4.5%. And they announced that they're going to bring in a new CEO. The price
uh,
dropped to roughly $40. And this is a stock before the price drop. You can see the chart here.
wow,
The price was $50, and I thought this was a
already
undervalued
cheap.
stock. Yeah, like, and I used to own PayPal, and it just refused to move.
Yeah.
And this is rough if you're a
Yeah,
PayPal investor.
a dollar 23 of EPS. That's like if you annualize that, that's like what? Almost $5 of EPS with a stock price of 40. That's a PE of 8. That is ridiculously cheap. If I didn't
E
already have so
7.7.
many ridiculously cheap stocks, this would be another one.
I,
No,
I wouldn't I
uh,
wouldn't touch it
no, the
honestly.
only reason I wouldn't touch it is because CEO. I mean, like, also, this goes to show you why, like, founder-led CEOs are so much better than CEOs that are brought in. Is because CEOs that are brought in, if they don't fix things in a quarter or two, they're out. This guy just came in, what, less than a year ago. He was
Yep.
given less than 1 year by the board before they fired him for not executing well enough. Well, that's not, that's just not enough time to turn around such a massive company. I'm not saying the CEO was great. I'm just saying that's the reason why I prefer founder-led CEO companies as opposed to non-founder-led, because these guys have to think very short-term as opposed to long-term. If they don't solve the problem next quarter and the following quarter, their job is at stake by the third or fourth quarter, as this guy was already fired. So, yeah, it's no good.
Any other earnings you want to discuss, or should we move to listener questions?
Let's do listener questions. We're running out of time too. So,
okay, we'll run a bit over today though.
Okay. Sounds
Hey
good.
guys.
Hey.
Hi.
We've had a lot of really great questions, so I'm just gonna crank them out. The first question for Hamid: do you think Robinhood should slowly start shaking the crypto BS off and go to the bank direction to gain more traction?
There's no reason to shut off that revenue stream. It's a very profitable revenue stream, and they have that revenue stream. As long as it's non-zero, why would they get rid of it? It just doesn't make sense. It doesn't have a significant cost for them, especially since they've already built all of the trading technology to do it. So, and crypto is not going away, by the way. Like, crypto's here to stay. There might just be less revenue from quarter to quarter, and as people sort of like go through ebbs and flows on crypto. But when you sort of step back and look at Robinhood's overall business, these guys have built now financial advising technology at a fraction of hiring financial advisors. Instead of paying 1% of your portfolio for financial advice, these guys are charging a maximum of $250, or 0.25% of your portfolio with a max of 250. So if you have $1 million, it would cost you $10,000 for financial investment. These guys are doing it using AI for $250. So that's a new business that they just launched in the past 6 months. They're about to launch banking. They just have like 500,000 customers on credit cards. Everything on these guys are growing. Robinhood is what I would consider a great company. If we were to fast forward 10 years, they're going to continue to have been great during the next 10 years, and they will be a dominant player, probably bigger than a lot of the other financial institutions 10 years from now. And the fact that we can pick them up now at almost half off their highs in the past 6 months seems like a no-brainer to me, but that's just me. I also am a high-risk investor, so that's the way I think about it.
The one thing I'll say about the banking side of business, which I absolutely think Robinhood should do, and they are actively moving in that direction, is a stickier business with a larger moat, which is good once they get the customers in, but it's just hard or perceivably hard to switch banks from a user perspective, as opposed to Uber, which we were just talking about, where it's just installing a new app versus uninstalling another app. So I think
Yes.
revenue from their banking business is going to slowly grow over time, as opposed to like this quick revenue boost.
Yes, but they could potentially get a lot of their existing customers to, if it's a matter of just transferring money from your brokerage account to your bank account, and then all of a sudden you have a checking account and bill pay service and all this stuff that's in the banking account. People might start in that direction initially.
Yeah.
You don't have to switch from Bank of America. You could just bring in just a portion of your money from your Robinhood account. Now that might hit their brokerage assets under management, but still, it would potentially get a lot of customers, and then over time you could transfer money from other banks. What else do we have?
Okay, staying on Robinhood. Question for Hamid: do you ever think Robinhood is sort of unethical, making money on risky products for retail? And then he re-entered Hood today.
No, I don't think that they're unethical. Options, I don't think, are inherently unethical. If you are trading options and you shouldn't be, that is a personal decision. Same thing with gambling. I don't necessarily think gambling is unethical, but um, I'm not a fan of gambling, but I don't see it as an unethical thing to do. And certainly, the company that's providing the technology is not unethical, just for providing the technology. So I don't view it that way at all.
Okay, you ready for the next one?
Let's do it.
Okay, let's go to Meta. Hamid, are you not worried about more governments banning social media for users under 16 and the impact on Meta?
Yeah, that is a little bit of a worry, but it seems like they've been able to navigate those waters for over a decade, since the concerns have been raised pretty well. And I don't see people under 16, teenagers, giving up that access. So I don't know if the lawmakers will be able to sort of like override the teens' desire to be on social media platforms. So if the parents can't do it, I don't see some lawmakers on outside of the family environment to be able to be successful at that. Um, and if they take a hit to their revenue in the short term, again, Meta is still a solid business. It's still a cash generating machine. For every dollar of revenue it has like 40 cents of profits, which is pretty incredible of a business. So the margins there are insanely high, and they can absorb some hits to that profitability and still have fantastic profits and margins. So uh, not overly concerned.
You ready for another one?
Let's do it.
Okay. Hamid, have you seen the results of Match? Any thoughts on Bumble expectations?
I have not been following Match. So I'm hoping that this next earnings report for Bumble is going to provide a lot of answers to questions. They've been pretty silent since their last earnings report. Uh, the and I think that Whitney needs to get out there and address shareholder concerns that these guys are going to be a relevant player in the dating world, especially for Gen Z. And without doing that, I think that it would be, well, without either having fantastic results in their earnings call, which is unexpected because they already set the expectation pretty low. So I don't think they're going to have fantastic results in their earnings report. But if they're not able to tell the story in such a way that could generate some excitement for investors, it might be a rough earnings. I don't know, but I do expect Whitney to step up in that regard. And I'm surprised she hasn't already been a little bit more vocal about what they're doing and the kinds of things that they hope to be doing to sort of turn the business around. But she did recently have a child, so there's been some focus on that. I suspect, for somebody who's trying to run a company and has had a child. But this should be about the time that the earnings report, I would hope, is the time that she comes out and like addresses a lot of investor concerns. So that's what I'm
And
hoping for Bumble.
I would like to think this is the quiet before the storm, or the calm before the storm. We know that they're working on these AI integrated products.
Right.
My sense is they're waiting for that to release for them to really be vocal and get out there. But we'll see.
Yeah, and she did set the expectation that that won't happen until mid 2026. So, um, I hope that there's some progress report and
Yes,
some excitement
absolutely.
that starts to get built. But until that comes out and until we see the success factor of those products, it might be a tough road. We'll see.
Okay, let's move on to, if I
But
may, and there's another,
by the
what?
way, just one more comment on Bumble. Bumble was up today, if I'm not mistaken. It was before the market closed. Let me see. Did it end the day up, or yeah, up 1% today when the
Yeah.
rest of my the rest of my portfolio is like a basket of blood. but Bumble,
In a basket of
Bumble is
blood, you have a little bit of honey.
Bumble was the only green. Um, that was fun. Anyway, I'm sorry.
Oh,
Continue. What was the next question?
Dustin, that was funny.
Thank you. Thank you.
Um, okay. If I may, and there's enough time for another question for
I,
Hamid, do you
I had
think
missed your. Sorry, I had missed your pun, Dustin. Anyway.
oh boy, it's a rough day for everybody. Um, do you think military space stocks are going to have a rally this year?
I don't know Ondas, OSS, Kratos, Rocket Lab. I obviously own, and I cannot predict when it has rallies or when its stock goes down or when the price goes down. Rocket Lab is roughly 30% off of its highs. I just didn't think it should be that high to begin with. So it being 30% off its highs doesn't shock me. By the way, like with respect to Rocket Lab and Robinhood, I've been very vocal about saying that these stocks, once they get ahead of their skis, it is very possible that they might be down 50%. Like this is something that I've said on this show in the past. And guess what? Robinhood is down 50% right now, right, from its highs, almost 50%. I think today may have hit that 50% mark. And those are things that you have to sort of expect when you're investing in these sort of speculative companies that are great companies, but they because of the speculation of how great they're going to be in the future, their stock price oftentimes runs up way ahead of where they are today, right? So I would say today, Rocket Lab price is still not cheap again because this company is not even profitable yet. But when I fast forward 5 years from now and I try to speculate as to what would Rocket Lab's revenue and profitability be based on the possibilities for them for their neutron rocket and the satellite building technologies that they have accumulated. I mean, it's pretty enormous opportunity, and that's what makes me excited. So, can Rocket Lab go down further this year? Yeah, I mean, it certainly can. We just saw that happen with Robinhood, despite being a profitable company. Robinhood is now trading at a normal PE, which is kind of crazy to think about for such a fast-growing company. But also, can it turn around and hit new highs in the next 2 weeks? Absolutely. I have no idea in the short term what might happen. I haven't started reaccumulating Rocket Lab just yet, but if the prices get ridiculously low, in my opinion, then I might start accumulating again.
Okay. Here's a question. I think I know what you're going to say, but I'm just going to throw it out there. Question: do you guys expect this pullback to continue? What do you believe started this, and therefore what could make it resolve?
I love it. What do you think my expected answer is?
There's no way of predicting anything in the market.
I don't have a
I like the
crystal
deep
ball. That's
voice.
exactly right. I love that. Yeah, I don't know. I mean, is the correct answer to that question. So let's go on to the next one.
Okay.
By the way, I'm also highly suspicious of anyone who says that they know. So or gives a quick response in these things. Oh, it's going to go up as soon as the 50-day moving average hits this, and the 200-day moving average hits that, and it's going to. But anyway, moving on.
Okay. Do you think all of this software SaaS stocks carnage is justified for AI fears? Companies creating their own software, per seat models disrupted by AI agents, productivity, etc.
I share Jensen's sentiment on this. Jensen was just on video answering this exact question, and he's like, "No, I don't think it's justified. If you could build a new hammer, would you build a new hammer, or just go buy the best hammer from the market, or like he used chainsaw, or whatever, like tools or technologies that already exist versus building it yourself?" And the answer to that is that you would just go buy what's already out there. If you're not in the business of doing that, you would just buy what's best already out there, especially since most of these companies are also integrating AI into their products in various different ways. So I think it's probably overblown. But the way I look at software and SaaS companies is again on an individual company basis. So technically, Robinhood is a SaaS company, right? It's a software SaaS company. Is anybody building their own Robinhood? Like, am I concerned about someone building their own Robinhood or the masses building their own Robinhoods with their AI agents? No, I'm not at all concerned about that. So it just does not make sense.
I agree. The other thing to keep in mind is even if AI is able to build these tools, you still need someone to manage it. Like if there's a new feature that you want, or if there's a bug, like you then have to work with the AI to do it. And I don't think it's going to be worth the company's time as opposed to buying a license. The other perspective I have on this is like, obviously Hamid and I work in software. We're not seeing this on the ground today. I'm not seeing anyone really building AI programs to use internally. I'm not saying it's not happening, but it's not happening at scale. That's for sure.
Right. What I think is happening is software developers are just way more productive than they would have been. We've seen that with our own teams with AI
Yep.
tools, and they're just doing more. So, like all these SaaS products are just going to get more and more capable, and they're going to put out more features and capabilities that their customers have been asking for. That historically they would have needed twice as much staff to be able to do, and now they can do it with the same number of staff. So. I see AI improving productivity of software engineers, not replacing software, the need for some of these SaaS companies. All right, what else? What else
You
do we have?
ready?
Maybe we take one more question and then
Well, can we do
wrap it.
2? I just
Let's do two.
okay. Okay. What stock or crypto really made you guys start investing seriously?
I'll let you answer that, Dustin.
I mean, Bitcoin was technically my first love, even though the first stock I invested in, I think, was Solar City, technically. But like I
Oh,
really got
really?
into Bitcoin. Yeah. And I bought Solar City because it was rumored that Tesla was going to buy them, and then sure enough, they did. So, yeah, Bitcoin.
I don't remember what the first stock I bought was. It was like so more than 30 years ago. So now, which seems kind of crazy to say, but I don't feel like I'm that old. but it was probably a tech company, probably Apple or Microsoft or Intel or one of those in the 90s. All right, one more.
Okay. There's just a lot of people bemoaning the fact that they don't have more cash to buy today. And so I know you guys both have a strong cash strategy. So I wondered if you could just kind of summarize your cash strategy to help the people in the chat feel better about not having enough cash.
Dustin, you go first.
I mean, you could always have cash. You just need to let go of some things at prices you don't necessarily want to sell at. It's hard. I mean, I had a very, very, very low cash position a couple weeks ago, if you guys remember on the show, and slowly I've built it up to 13% of my portfolio by selling some things, and I was fortunate to sell things then as opposed to now. And that was more luck than anything. Like this drawdown could have happened when I was very low on cash. Um, so I mean, to me, it seems like the options are either you need to sell, you need to let go of some positions, or you just kind of ride this out. And when the market kind of turns, you start taking some profits and holding a portion in cash. And that's obviously a personal decision of how much you want to keep in cash at any given time.
Yeah, I mean, I think the one way that I look at it is that no matter how bad things appear, they can always get worse. So for that reason, I don't use margin. I feel terrible for people who use margin during these kind of drawdowns because they get margin called, and that's a terrible scenario because you get forced to sell things when you would actually want to buy them. So keeping that in mind, I like to have at least 10% of my portfolio in cash at any given time. Again, unless I was still having a significant income from somewhere else, in which case I was adding to my portfolio on a regular basis anyway. I'm not in that scenario anymore in my life. So my portfolio is kind of it. And therefore, 10% feels like the right number not to go below. Maybe I would in certain extraneous circumstances where I thought that market was like way oversold. And right now, I don't think that's the case. Um, but so keeping that in mind, I try to buy companies when I think that the great companies when I think the price of them is good, and I start to sell or trim my positions when I think that the price has gotten ahead of where I think the price is decent. So you've seen me trim, for example, Rocket Lab or Robinhood or even Meta over the past couple of years. And I completely exited Netflix. I completely exited Uber. Both of those, products or SMCI, American Eagle. Most of these companies, maybe with the exception of American Eagle, I haven't looked at them yet, but like most of them, the stock price is lower today than at prices where I thought it was like getting ahead of its skis, including Rocket Lab and Robinhood, by the way. But now I had a large cash position. I'm using that to buy back some of the Robinhood that I sold. Um, I think the last time I sold Robinhood in the 80s was more than 7 months ago. So I'm buying back Robinhood shares 7 months later for a lower price than I sold them for 7 months ago, and I sold them all the way up to 150, in the 150s, and now buying some of it back. So having cash is a great way to sort of be able to make the bumps a little more cushiony, and then also be able to take advantage of the downturns if you think the downturns are excessive. But sometimes that excessiveness just continues to go down even further. So I have no idea what's going to happen tomorrow or next week or next month. We might see new lows. Who knows? But if that happens, I'm still going to have some cash.
And with that, I think this was the longest episode of Buy Hold Rant we've ever done, but there was a lot to cover. I'm going to do a slightly different call to action for the end of this episode. You could follow us on Twitter at Buy Hold Rant, at Hamid S, and at Dustin Alper. I've been trying to post more on X and on Threads with my thoughts. So
I like that. Look at that ticker down there. Wow.
You know what? I
That's
made
impressive.
this when we first set up Restream and never used it. So I'm like,
Oh,
you know
how
what?
funny.
We should break this out.
I
So
like it.
that is it for the 25th episode of Buy Hold Rant.
Awesome.
Thank you all for listening.
Thanks, everyone. Bye.